May 5th, 2018, Saturday. Welcome to the market update. Again, my name is K Kim with the Traders Club. Hope you guys had a good week trading this week. A lot of shenanigans, a lot of up and downs, freaking everybody out. Bears are going crazy, terrified. Bulls are going crazy, like getting whipsawed and, getting chopped to death. This is what I want to say for those of you. So now that I have stirred up some of my followers yesterday or last Friday with my rant video, this is what I want to tell you, my genuine followers. Patience is bitter, but its fruit is sweet. And this right here, ladies and gentlemen, it applies not only in trading, but also in life. Whatever you want to accomplish. You want to repair a relationship. You want to, you want to work on your trade, your vocation, your job, your skill set, whatever it might be. You want to be better. You want to lose weight. You want to get stronger. You want to build your body. You know what I mean? You want to get your doctor's degree. Whatever you want to be, man. Do you really think that it's just going to be like, it's just going to happen like overnight? See, most short-term traders are like that. They are nothing but gamblers. They just want things to happen like now. I want to make money now. I want to see my money now. I want to see what happens this week, tomorrow, next week. That, ladies and gentlemen, is a poverty mentality. You see what I'm saying? Only poor people, they say, well, I worked this much this week, so I want to see my paycheck. You see, the wealthy look to the future. They look at, well, how can I build my wealth? How can I build my portfolio in the next couple years from now, next 5 years from now, next 10 years from now? You see what I'm saying? Here's another quote here, right? We've long felt, this is Warren Buffett, we've long felt that the only value of stock forecasters is to make fortune tellers look good, right? Even now, Charlie and I continue to believe that the short-term market forecasts are poison and should be kept locked up in a safe place, away from children and also from grown-ups who behave in the market like children. I love this because there are so many behaving like the children, just going crazy, right? Either they act like children or teenagers, right? Every single day, they're pissed off about something, pissed off about the world, pissed off about the market. Every single day, they're whining and crying. They're always blaming somebody, blaming the Fed, blaming the country, blaming China, blaming Russia. They're blaming but themselves. So, let me tell you something. Like, if you're short-term trading and it's been putting toil in your life, like you literally want to pull your hair out, well, it is time for you to maybe start thinking long-term. Start thinking doing things in the long term, because I'm telling you, it is much more peaceful. But the thing about it is, not a lot of people can't do it, even when they want to, because a lot of people are always fearful of the market, and then when the market starts shaking and baking, you know what I mean? Everything they've ever learned goes out the window. And this is the reason why most traders fail. Most traders fail. Anyway, so today we're going to be looking at Spider, IWM, Qs, and I do want to talk about Apple, Twitter, Intel, Cisco, and Snap. I got some people asking me about Apple, some people asking me Snap, and then I thought I'll also kind of include Twitter, Intel, and Cisco. So I do own Twitter, Intel, Cisco, Snap. I don't have any position on Apple. So we'll just kind of do a little bit of a update on those. Let's start with Spider. Actually, Spider, obviously, we've been talking about this level right here, rising uptrend support. Actually, what I want to do, I actually want to put my 200 SMA. Oh yeah, it is already at low. I have my 100 SMA at high. I got my 50 at low. I got my 20 at close. If you want to follow my moving average, right? So basically, you can see my 200 SMA, right? The 100 SMA act as resistance. That's why I put it on high. And my 200 SMA is at low to accommodate this low, that, and this low, right? And then I got my 50 at I got my 50 at close, I believe, because 50 hasn't been. Let's put that on close. Yeah, let's put that. Yeah, let's put that on close. And let's put 20 at also at close. So 20, 50 at close, 100 at high, 200 at low, right? So you can see, so that's, I think it's going to be beneficial to track the 100 and the 200 as this thing starts to go up here, as it starts to maybe pull back or something like that. So looking at this here, obviously we had the hammer candle, we had the follow through, that's a good sign. But keep in mind that we still have that lower highs and lower lows. Like we can still draw this downtrend resistance right there. So that's kind of where we stop there, coinciding with that 50. So at the rising uptrend support, and then we got the 200 SMA rising there, and then you got that, you got some of these lower highs. So what can we expect going into next week? So, well, going into next week, let's actually let's check out whatever happened to my 65-minute chart. Oh, there. So this is Spider. So you can see, go like that. So we're looking at more of a 65-minute chart here. Looks like we kind of gotten above it, right? So, well, first what we need to see is that, since, you know that I've been tracking gaps. This is the reason why gaps are important. You can see this thing came down. You see that this gap was open for quite some time. Well, it's finally filled. So a lot of times, that's why the gaps are important, because when the gap gets filled, the same thing happened right here. You see that? You see it right here? This gap was what? Filled. And then bears took advantage of that and took it down. Well, this gap is finally filled, and bulls took advantage of it and brought it up, right? Obviously, there's this gap is gone now. So, and there's actually the upside gap is still open. The downside gap from here is actually still open. So we got these gaps. That's the reason why I've been tracking gaps. This is what I'm saying is that you can see we looking at more of a micro term here. We do have lower, low, and lower high. So looking at more of a very, very short term, though we shouldn't be so accustomed to speculating short term, just like Warren Buffett just said, right? We should lock it and take it away from it, right? So understand that I do these short term, so you can kind of see what's going to happen next week. But the way I trade doesn't mean I'm like, oh my God, I made a new low, I'm going to get stopped out. You know what I'm saying? That's not how I trade. You guys know that. If you follow my journal post of how I trade, you see how I trade. Just because it one day down, like sometimes I do all these journal posts, and then the stock goes down, or my position goes down next day. I'm like, and people ask me sometimes like, well, is your view changed? Well, my view is not going to change just because of one day of decline. I just want to respectfully say that, because people do ask me that a lot, and I'm like, you shouldn't be looking at the market. You should not be trying to time the market perfectly. Once you start to try to time the market perfectly, that's when you're going to see this market will hook you, control you, and make your life miserable, because it is nearly impossible. I'm telling you the truth. Believe me when I say this. There are people out there trying to think that they can master it and time it perfectly every single time. Trust me in this. Nobody can time the short-term movement perfectly. It is impossible. Nobody should ever try to time it perfectly here, trying to get it here. Okay. You know what I'm saying? Like, you literally cannot live your life trying like that. You know exactly what I'm saying. Any of you who try, you know exactly what I'm saying. You living your life like that, man, you'll be like depressed one day, you'll be happy one day, and your whole life is so consumed in life. This is no wonder day traders, they have the lowest life expectancy, like second lowest life expectancy or something like that. Somebody told me. So I don't condone day trading. I don't think anybody should do it. But anyway, looking at the 65-minute chart, we actually technically do have lower lows and lower highs as of today. So technically, we're still in a downtrend, which we can see in this daily chart here. So I think what's important though, we are actually holding this level, right? So we got that low, and this is actually considered as higher low, right? So now we got this low, and then we got this kind of equal low, and then for the first time we got that higher low, right? So it didn't put lower low. Actually, it saved the day when the bulls came back, bought this dip on the 100, 200 SMA. So that's actually a good sign, right? So we haven't seen this kind of a buying candle. You see this bullish candle. This last time we saw something like that was right here. See, that was the day that we saw that kind of a long bullish candle right here. And this is a kind of this is the second time we're seeing it in about over a month now. So if we do see a follow through, it doesn't mean it's gonna go straight up. Even if we come back a little bit, and then if we can break out, I think that would be the first sign that you wanna see that kind of coming up here, and then kind of, you know, either it's come up and then we're probably gonna retest at 200 SMA, and then either we pull back, continue, or it could possibly get up and we'll start to see some kind of a gap ups or something like that, or even fill this gap. So right now I do see a good constructive move here, and I think this could possibly turn things around if we can see a follow through above this level. I think at this point, what I do see on the 65-minute chart, that we do have a kind of a bullish divergence. Let me put in a MACD here. Get rid of my volume. Do you see the bullish divergence? Same bullish divergence we saw here, which I tweeted about, right? And we are seeing that bullish divergence now. We got that slightly, I mean, it's not like, the angle of it is this with a much more definitive higher low here with the lower low on the price action. Here, definitely this is lower low, right? We see that. Here, let's put that in there, and then let's do that. Definitely, you can see the lower low on the, you know, in the price action, and the higher low on MACD. That's a bullish divergence, very similar to here. And with that, plus with that hammer candle and the follow through, I think there's a lot of momentum built here in the micro term. So if we can able to get above this level and we can thrive, I think for sure we'll come back to retest this level. I think with that bullish divergence and with that momentum that it has built last 2 days, right on that 200 SMA, and we are in the vicinity of higher low, right? This low is definitely higher than that low, right? So we can actually categorize, label this as a higher low. And we got that hammer, and we got that continuation follow through, and we got the 65-minute chart bullish divergence. So we have a lot of bullish momentum built here. So if we can able to hold, I think above 263, right? If we can hold above 260, because there may be, this thing might pull back. You know, maybe Monday, Tuesday. If we can hold that, either we gap up on Monday or continue higher, or either pull back. If we does pull back, we want to see 263 hold. If we does hold somewhere in that vicinity, then it could. I'm talking in a basic closing prices basis, closing price basis. It could come all the way down 260, some volatility, and then get back up. But by closing price basis, if you can hold above 263, should the price slide early next week, I think then we can actually finally break out of it and get up to 270, 271, up to 273 and fill this gap. But things are gonna get a little bit hectic once we fill that gap, because we have that downtrend here, right? And it's a pretty prominent downtrend everybody's looking at. So what's gonna happen is it's gonna get up here, fill this gap, and then it's gonna look like it's breaking out of it. A lot of chasers are gonna come, start buying the breakout. It's probably gonna pull back, shake some people out, and that's something that we can follow up next week and see how it reacted in that vicinity, right? We got the 100 SMA there, we got the gap area there, and coinciding with this falling resistance there. So I think definitely we can have to get back up here as long as we hold above 263 by closing basis. Then what bulls need to is obviously a slight gap there, fill that gap and fill this gap and kill these downside gaps, and then a pull back and a rest a little bit, and then get back up and get up here and fill this gap and fill that gap, and then probably gonna pull back again, and then some. That will be a potential scenario where the market could play out. So again, let's not get too ahead of ourselves. Let's see how it plays out next week. and we'll follow up and we'll look at how the price action look like looking at things next Friday. Let's go to IWM. IWM looking good here. This middle level, middle ground acting as support there. I mean, even if I do a little bit of Fibonacci here, you can see that's probably a 50%. Yes, you can see that 50%, that's where we found support. Let's move that a little bit. And we can see that we have a low, higher low, and we got another higher low. So we got the lower highs, higher low. That's a symmetrical triangle pattern. A lot of times, these consolidation pattern is usually a bullish signal. But like I said, when the things start to consolidate, it's not always so pretty. It's gonna kind of have some traps here. So sometimes it has a traps like this, trap to the upside, trap to the downside before making a move. Sometimes it gets trapped. Sometimes it's just also it's very smooth where it goes up, come down, retest, and then sometimes it's smooth. Sometimes it's shenanigan. But when when the price starts to consolidate like this, a lot of times it's very, very tough to pinpoint perfect breakout point because it could get up, act like it's going to break out, come right back down, looks like it's going to break down, and then go right back up, and then do something like that. So keep that in mind. When price starts to consolidate, there could be shenanigan, but this is a very constructive look on the Russell 2000. Unlike Dow Jones or the S&P, the Russell 2000 have been faithfully cultivating higher lows, and we're nowhere near 200 SMA. We're actually above all the moving average as of today. We're above 100, we're above 20 and 50. It is a different story on the S&P. S&P, we still have a declining 50. We're still below the 100, right? We still have this downtrend resistance and this one. Right, we're still near the highs, lows. I mean, we're still near the 200 SMA. Russell 2000, obviously, we can see it visually. They were far from it, and then in that process, we also kind of possibly cultivated higher low, their possible potential uptrend support, and then we got this. So we got this kind of an uptrend going, downtrend going. Let's see if we can break out here. Maybe we can throw another resistance there. So maybe get up, pull back. That will be a perfect scenario. If that happens, I'll even buy that dip. So we'll see how that plays out. Let's go to NASDAQ. Here's a good news about the NASDAQ. Good news about the NASDAQ is this. Let's actually go back to hourly chart. The good news about the NASDAQ is NASDAQ actually, the Qs, we actually didn't fill this gap. It failed to fill it. Here, let me show you. It didn't fill all the way. It is actually still open. A lot of times when the gap doesn't get filled all the way here, this is where the gap started. You see this? This is where it closed. That's where it opened. So there's this big gap, right? Failed to fill that gap. Market get up. Bears tried one more time to come down, fill it. It failed. Remember, gap started here, not up here. This is a closing price. This is an opening price. Gap started right here. It failed to fill this gap. We still opened that gap. That's when buyers came in and really got above this level. This is actually a good victory in the minor term because you can see that we now have low, higher low, higher low, another higher low. We got series of higher low. What is the definition of a downtrend? Lower lows and lower highs. We don't have lower lows. What we have is higher lows, and the gap actually remains open as of today. So now we got above it. We still have this here. So I think next level is 166. I think what is going to happen is I think it's going to get up here. Either it's going to come fill this gap, or it's going to come down to the gap area and then see a pullback. So either it's going to come and fill the gap and then come back. The best case scenario for the bulls, it will be get up and then gap it up. Then makes this whole thing, island reversal. That's a possibility. That's a best case scenario. I'm not saying that's going to happen. If that happens, that's a pretty bullish signal. But I think we're going to kind of get up here. We're going to start to stall here at some point. I think a lot of people want to think that this head and shoulder formation has been completely nullified. I think what's likely to happen is that the market is going to want to get up, and a lot of people are going to start chasing it as they start to get above it, and there are a lot of these retail traders are going to start chasing it, and then what I think it's going to do is going to have another shenanigan. That's what I think. I think that's what's likely to happen, and then kind of make people fear even more, like this big head and shoulder with a gigantic right shoulder, and then could possibly, do something like that, and then possibly get something like that. I don't think it's gonna be easy for the Qs to kind of give you this path for the bulls to buy it and then just. I mean, it's a possibility. It could go boom, 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 right? But that's probably not going to be at this point. I think it's going to get hectic here. But I think if we can continue to kind of stay, some of these levels right here, 160 and some of these levels, then I think it could kind of hold and then get up. I think that's what I think is going to happen. It's going to make things difficult. Do you really think, people say something like, oh yeah, I don't want to go long above 160, 60. What do you think is going to happen once you get above there? It's going to just tank. Something like that. It's going to come down and take your stop, and you're going to be like, oh, I'm done. And then it's going to get back, or you're going to chase it again and come back down again. Oh, I'm going to stop down, gets up again. And then it's just going to do that for a while while most people are sick and tired of it, and they're so irritated by Qs, they'll be out of this trade, and they say, I'm not going to trade this thing anymore. That's when everybody gives up, that's when this is going to possibly get up to like 190s and possibly even 200. I think that's going to happen. I think it could get 190 before this year's over, maybe even more. But for now, I think it's going to get volatile here. I spent way too long on these. Apple, I know I wrote an article that if we see a pullback, I'm looking to go long around 135 or so, 140, 135. What we didn't have, we saw a big gap on earnings. And right now what we see is on this weekly, we're starting to nullify it, but we're still consolidational phase. I don't have any positions on it, but this thing needs to kind of get up and then start doing this, like this oscillator here. So now it looks like what it wants to do is, I think, like I said, either it's going to come down or it's going to consolidate and start to try to nullify. So I don't know if it's going to, like I said, when the price starts to decline, like start to consolidate like this, I mean, it may break out and go, but it's not going to be that easy. I think it's going to still do a lot of head fakes here. So this is not a level that I want to start being involved in it. I want to see if that weekly bearish divergence gets nullified, kind of get back into healthy mode, and again, when this thing starts to consolidate like that, it just kind of get hacked. I think best case scenario would be if there's like a big breakout and a calm down and pull back, and then something like that, and then that will be a good buy entry, right? But like trying to go long right, if this thing does break out, trying to go long right on the breakout would be kind of tough. I mean, yeah, it may well continue higher, but it might be a lot of whipsawing action there. So actually with this move though, Apple is starting to look kind of better. So I want to kind of watch it. I have no positions on it. Let's go to Twitter. Twitter, obviously, I've been accumulating since 20, and I've been buying these dips here, and I bought some more there. I bought some here, and I'm holding it. But this gap has been filled, so then that's what active support. That's coincident with the 100 SMA. So 100 SMA acting as support. We got this rising uptrend support. But what's kind of getting into it is this weekly chart right here. You can see that right there. So and then we got this right here. So we got that lower high and the prior support acting as resistance. So now we got kind of sandwiched between this. So either we kind of start to consolidate here, and I don't know, it might break out, it might break down. But if it does break down, which is a worst case scenario, we want to see 25 level hold. 25 level hold. If we can see 20, that's which coincides with the 200 SMA, then if we can see that, then I think that could be another higher low before going up. We could have probably even do something like this, like the rising pivot, right? Prior resistance, right? If we do see a pullback, that's coinciding with the 200 SMA. You see that 200? That's the level where it's gonna come down. I think that's a good level to buy, accumulate more, and then Twitter could do something like that. Intel, I'm long since 35 right here, and I've been adding on the dips, buying some more shares here, and holding full. But Intel also it's just been grinding. Intel also do have bearish divergence on the stochastic, but it's grindy, it's not clean. You can see that I got the bearish divergence. The clean bearish divergence is more potent, meaning like you can see that peak to peak, higher high, lower high, peak to peak. This is like peak, 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 peak. It's grindy, right? So it's not as potent, but this is probably gonna make things a little bit hectic. I won't be so. There's only two things gonna happen. Either it's gonna have a one like, it's gonna have that shakedown, the shenanigan move to the downside, and shake people out, and then let the investors fear, close out their positions before going higher, or we just see just thrusting move, like something like this, and then pull back, and then something like that. But this is what the textbook says. This is a rising wedge. But trust me, in this rising wedge does not work that well. I've seen these kind of rising wedge where it goes up and it looks like it's going to break down and then it just goes right back up. I've seen it happening so many times. This is why you don't want to pay so much attention to this rising wedge, falling wedge. There's so many people do that, right? It fakes people out, especially, like I said, when this thing is consolidating like this. You know what I mean? When consolidating like this, there's going to be a lot of head fakes. It's a very, very hectic situation, and especially when Intel broke out of this long-term, almost 18-year consolidated. When was I start accumulating? I was accumulating here before the breakout. That's what smart money does. Smart money start accumulating before breakout. That is institution, right? Institutions start supporting this, and that's public participate. You see a lot of shenanigan, a lot of these wicks, a lot of up and down. Just retail trader just getting chopped to death, getting slaughtered, trying to go long, trying to find that perfect point. You know what I mean? Trying to trade this thing, just getting chopped to death, getting slaughtered. You can see it even in these monthly candles. That is a public participation right there, just shenanigan. Institution, smart money. Smart money always go before the move. Right? That's what they're called, smart money. This is the reason why I go long here. This is when I start going long heavy and I start adding a little bit up here. But I'm just chilling. I'm like, okay, let the retails just get chopped to death here. You know what I mean? And if this thing pulls back sharply, some of these level, like maybe here, right? Prior resistance, maybe new support. I'll buy some more. I'll add some more at the 200 before getting up, because I think something is going to happen. Like either it's going to be a big thrust to the upside, or we're going to have a big downside, shake everybody out before going up. But looking at a long term looks good. I still think Intel, my target is all-time high and beyond. When I first wrote my article back in early 2017, Intel set to soar. My target was all-time high and beyond 80s. Right? I'm still targeting. I'm still holding full position. All my calls are gone. I was buying these leaps, long-term calls, and then when this thing started doing that, I'll start closing them out. All my calls are gone, but my shares, I'm holding full shares. And this is not a environment to start playing with these calls. You can see that right there. See that right there was a great move to hold that leaves when this thing starts to just really start to move up here and start closing them out. Start closing maybe like third, half, and then all of it, right? That's how I did it on Intel. But I'm holding full shares, added shares, but I haven't played shares or calls on Intel for a while. CSCO, I started accumulating shares and calls down here, added more, and then when this thing started going up, I closed most of my calls. I'm actually holding a little bit of calls because they're 2020 calls, but I closed out most of my calls here. But shares, I'm holding full from here, added some more in some of these vicinity here, but it's starting to kind of hectic here, right? Same thing, right? Smart money start buying below this level, maybe even down here, they hold it. And then you can see some institution support, and then things are getting hectic. This is a public participation. Every time when the public start to get excited about CSCO, right? Because they don't want to go long when things are difficult. Like here, this is where I went long. This is where I went long. After this big gap down, this is where I went long. You see what I'm saying? When everybody's scared and they're getting hell out of CSCO. They're like, I'm out of here. I can't take this anymore, right? I'm buying. That's how I do things. I buy where publics are exiting. I sell where publics start coming in. But so this is a reason why when this thing started getting up here, I started selling my calls. I'm holding full shares because I am bullish. I am long-term bullish. My target, like Intel, they're 80s and 90s above. So I think there's still gonna be a lot of chop fest going on here, a lot of up and downs here. But you know, if we do see some move here, maybe some of these levels kind of watch out could possibly come and retest 200 SMA. That's the worst. I think the worst case scenario, I think the 200 SMA, or we could just chop here up and down like this and consolidate before going higher, or maybe fake people out, maybe a little bit support, kind of fake people out and then go higher. I already know exactly how things are going to be. It's not going to be easy to trade in this vicinity after it already made this move. This is now it's going to start to consolidate. This is why most of my calls are gone, but I'm holding full shares because you know what I mean? It's going to move, but it's going to be a little bit tough here. So there's going to be a lot of shenanigans happening here. This is kind of what I'm saying is, this is what there's circumstances where you want to, you know, buy calls and ride the upswing. And then once it gets that big move, now things get a little bit hectic and it gets difficult to kind of, you know, find that big move because that big move already happened. That's why most retail traders, they're always late. They're always, that's the reason why smart money is always going in when everybody's fearful, and they tend to get out when the public start coming in, right? Let's go on last one, Snap. I'll let you guys go. This video went much longer than I anticipated. Well, Snap, I actually started going long. I actually got my first position right over there, like right about here, 1248, and then I added them over right there. So, and you know, this was a heavier position. I got in a little bit lighter there, and then that thing tanked, right? So, so people are asking, so, because I thought either gap was gonna hold, or if the gap was filled, it's gonna continue higher, but then that big gap down prior to new lows, I think is carrying a lot of people out. So, at this point, I'm not sure if a Snap is going to be, I'm holding everything right now at this point. I'm not sure if Snap's gonna be as good as my other long-term candidates now. And I'm thinking I want to try to get my money back and I want to get out. I don't want to hold long now that it has made new low. Though, I mean, it could still change for now, but I compiled 4 scenarios where Twitter did the same thing, where it like had a big gap down. So here, you see this is a big gap down, right? That's a big gap down, this earnings gap down, and then this made a new low, right? So I've compiled scenario that we saw on the Twitter. So here, this was back in 2014, this Twitter daily chart. You can see that big, this is ER gap down right there. And you can see this made a new low. It did continue lower, but 5 months later, what happened? We actually gone higher than where it gapped down to, right? So we got this kind of gap up here on the next earnings. So 5 months later, it actually came back up. This is Twitter again back in 2015, 2016 June. Got a big gap down here, ER gap down. It actually didn't break the support. 5 months later, see where we're at 5 months later, right? So you can see another one right there. This is actually really big gap down. This actually resembles the most with the current Snap scenario where it has a big gap down and breaks below the support break. This is where the market trapped everybody. All the Twitter holders or people were chasing it up here, right? What happened? They got scared. They say, well, you know what? I'm going to at least place my stop just below this support. And then it takes out their stop. And then 4 months later, don't you love this? Don't you love this market? This market just knows, man. And then one last one. This one's actually much more painful because this ER gap down, it got below it and it stayed below for a few more months, but about total 5 months later. So this 5 months is from the gap down, and then 5 months later, you can see it actually gone way above that. That's right there. So I think this 4 scenario kind of represents what could possibly happen with Snap. So that's why I held full position. You can see that gap down. So could be, I think it has 4 or 5 months to kind of redeem itself, maybe possibly gap back up like this to 20s. And then I want to kind of close. I don't know at the point, I got to kind of re-examine the whole situation, see if I want to hold longer or maybe close out my position with, you know, with break even or a little bit of gain. But that's kind of, I don't want to close it out here, right? I don't want to be a victim of this, right? And I want to see if we can turn things around in the next 4 to 5 months, and you know, we'll see how it plays. So that's why I'm holding it. I don't know. I mean, some people, and I don't know if this is a level to add. I mean, if you really want to like play this, if you think that this is gonna happen, then I guess you could. But I'm not gonna be adding or anything like that. I'm just gonna be holding tight with my current positions and see if I can turn it around and if I can see if I can either break even, or maybe even I can turn into a winning position, salvage the position, and then close it out and then be done with it. Or maybe could it be potentially maybe like a wide inverted head and shoulders? Maybe is that something possible, or is that some kind of maybe more deeper consolidation? Maybe this was a new low and then get up and then maybe consolidate and then possibly get up here. Because one more thing is that also SHAK. I was long right here. This one, it doesn't always happen, and I'm not trying to say that just to brag, but I'm gonna actually make a point with snap. But I actually got long right there. I'll show you why. And again, it's not always happen like that. You can see right there. So this thing came down to 50, and then it's coinciding with that 200 SMA. So I actually forgot about it. I was watching snap. I forgot about it last time I saw it. When I saw it again, this was actually retesting that 200 SMA right there, and then the last level of fib. I'm like, well, that's a buy. It already made another higher high here, so we just need higher low. You know what I mean? That's a great setup, and so I bought that, and then it worked out. But it doesn't always work like that. Sometimes you buy, sometimes it comes down a little bit lower and then go higher. You see what I'm saying? But what I'm trying to get at though is maybe, like here, like. I'll let you guys go with this. Look at this. This is the market, guys. How many people do you think watching this and then watching this support, and then look at that, made a new low? It wasn't earnings. It wasn't earnings, but it made a new low, scared the hell out of everybody, right? All the investors there running for cover. They're just hitting the exit button, right? And then that was that proverbial bottom. Yeah, so we didn't make any new low after that. We came close, but after that, it made a new low. It was March. It got back up to this high in December. So it took 7 months. 7 months, right? So from this low, March, coming back up here, December, right? It took 7 months to do it. But it would have been better to not get trapped like this, but maybe hold through it and then possibly getting the, and then obviously now snap is, or SHAK is here. I actually like their, business model. They claim to use all grass-fed beef for their burgers. And if that's true, if they're 100% grass-fed, I think I've had that. There's a one chain in here in Minnesota, but there's a lot in New York. And when I was visiting New York late last year, I was able to try a couple times. I really like that. I'd rather eat a SHAK than McDonald's for sure. And for the fact that I'm very health conscious, so if they're really eating this, really using 100% grass-fed beef, then that's a plus. So I think right now, I think you can see, you can even see in this gap when this this Fibonacci here where it came down, when it came up to, you can see 161.8%. We're pulling back. I think if that gap remains open, I think there's a chance it might come back and pull back and retest. And if we can keep this gap open, I think SHAK can actually gap back up to some of these levels. As long as we can keep this gap open. If gap gets closed, it's going to get a little bit more hectic. But either it keeps the whole gap, or sometimes you'll come down and feel the partial gap before getting back up. So we'll see. We'll see how that plays out. Well, that's it for me. You guys have a wonderful weekend. And good luck trading next week.